We're going to bring in Bloomberg's Crystal Say, who covers deals, joins us now. And she joins us actually from the Goldman Sachs annual retailing conference in New York. I'm sure this is the talk of the town there. And Crystal, before we ask how you see this process going to spill out some of the facts of the deal, they've retained Moelis & Company. They've said in a statement, or a filing rather, that they are looking for financing, debt financing to complete this deal. And the offer of $23 in cash per share is contingent on that financing as well as a certain amount of shareholder approval here. Of course, this is the founding family of Nordstrom, but $23 is still really the average price of the stock over the last 5 years and well below the high. How do you think the story plays out, given what we know?
So first of all, it's really interesting to look at the department store space. It really has changed a lot in the past 5 years. They're quoting this, it's a 34% premium compares to their previous whatever period that they looked at. But if you look at department store, a lot of change in e-commerce, a lot of change in the way that people had shopped. So if you look at the 5-year horizon, it really wouldn't be too flattering for Nordstrom or for any department store. And like you said, there is a family component here. I think the most interesting thing about this Nordstrom situation is that the consortium, the Nordstrom family, and this Mexican department store actually own a combined 43% of the company already. So they're trying to buy whatever they don't own yet. And there will be a couple of hurdles, like you said, financing being one of them. But we will see how this plays out.
Well, and a poor outlook, as you point out. I mean, I get that the family wants to buy the asset because it's their namesake. They have a huge history here, but can they make money? What do they need to do to improve operations at Nordstrom? Do they need to invest a lot?
So there are different ways to run a department store, but a lot of people would say the real turn of the century really is that people shop online these days. And but then if you don't shop online, you're really valuing the experience. But whatever you're doing, being privately, it's what they think it's a better option. If you look at Saks, which is a private company, they had actually explored things like spinning off their online business and doing, capturing the online valuation versus the offline brick and mortar store, and that allowed them to do that because you don't have to report quarterly. So this is probably what the Nordstrom family, as you pointed out, the family, the two members behind this deal is actually the great-grandson of the founding member of Nordstrom. So it has a family heritage there, but they're also looking at being away from the public eye and being able to transform Nordstrom as a company privately.